Hello, so today in this video we are going to give an introduction to the financial statements. Now, why financial statements exist? Because business must show their financial health. Investor, banks and regulators want to know that is the company profitable? Does it have too much debt? Does it have enough cash? Is it growing or declining? Now, what are financial statements? Financial statements are reports that show the financial health of a business. Think of them like a medical report for a company. The five main financial statements are: number one, balance sheet; number two, income statement; number three, statement of comprehensive income; number four, statement of stockholders' equity; and number five is statement of cash flow. Now let's talk about balance sheet. Balance sheet shows the financial position at a specific date of a company. It has three main parts: asset, liability, and equity, which is the owner's part of the company. Asset are resources which is owned by a company. For an example, cash of a company, inventory of a company, some equipment, machineries, and account receivables. And liabilities are the obligation and that owed to others. For an example, loans, account payables, salaries payable, and bonds payable. Equity represents the owner's claim on the business. Example, common stock and retained earnings. Accounting equation: it has a simple accounting equation: asset is equal to liabilities plus equity. This equation must always balance. Income statement shows company's performance. Income statement shows company's performance over a period of time. It has a basic formula: revenue minus expenses is equal to net income. Now let's talk about revenue. Revenue are the money which is earned from normal business operation. For an example, selling product or providing services. Expenses are the cost which is incurred to generate the revenue. For an example, salaries given to employee, or if we paid any rent for office building, utilities, and cost of goods sold, etc. Now let's talk about the net income. Net income is equal to revenue minus expenses. This represents the company's profit. Comprehensive income is equal to net income plus other comprehensive income. OCI represent gains or losses that are not generated from the company's normal operation. For an example, unrealized investment gains or losses, foreign currency adjustments, etc. Now, statement of stockholders' equity. It explains change in equity during the year. Here it has a simple formula, that is beginning equity plus the net income which we earned throughout the year minus if we paid any dividends to the shareholders is equal to our remaining ending equity. Now let's talk about statement of cash flow. It shows how cash moves in and out of a company. Company is a three section. First one is operating activities, second one is investing activities, and third one is financing activities. Now let's give a summary of what we have learned. And first balance sheet. What the company owns and owes. And now income statement, which is simply profit and loss. Now equity statement, which is changes in ownership. And finally cash flow statement, which is movement of cash. So that's it for this video. Thank you.